Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello, I'm Dong Jiaqing, Tony. Let's begin today's group discussion. First, let's look at today's 2 topics, Trump's 3 walls and last night's financial reports. I admit, there's some personal interest here. The 3 topics Tony is most interested in are defense stocks, Texas Instruments, and CN. So let's take a look. Okay, let's start with the first one, Trump's 3 walls. The first wall is China. I believe this wall is. Right now, this is actually the most troublesome wall for him, because he's really wavering on this issue. On one hand, he wants to negotiate with China, but on the other, he doesn't really want to give in or lower himself to negotiate. So you see him going back and forth all the time, saying one day he wants to meet, and the next day he doesn't. Yesterday, he once again put on a display of this, trait. I mentioned before that Trump is known for being unpredictable, while Biden's trait is indecisiveness. He likes to think things over for a long time and hesitates to make decisions. As for Trump, his trait is being unpredictable. Sorry, it's that he swings back and forth. He's always wavering. Sometimes he wants something, then he doesn't. But I think that, at the very last moment when a decision has to be made, Trump's decisiveness is actually better than Biden's. So I think in the end, he will still make a decision. Yesterday, he once again talked about, dealing with the Communist Party. When he met with those congressmen, he said again that he would negotiate a good deal with China, but then he also said that the talks might not happen. I think, honestly, he's a bit uneasy about it. Because, regarding the timing, it's only Trump who has said there will be a meeting. So far, the Chinese side has been very tight-lipped, not saying much at all. The Treasury Secretary did say he would meet with Chinese officials this weekend, but... should I say something about this? If they're only meeting this weekend, and you want to catch up in time for next week, the talks start on the 30th and the 31st, and then the APEC meeting begins on the 1st. If they really want to meet, and they only meet this weekend, so Besant only meets with He Lifeng to talk, actually, that's pretty stressful. Why? Because the Chinese authorities usually announce this about a week in advance. Next week, their heads of state, including, President Xi Jinping and Premier Li Qiang, their schedules, breaking the usual routine is a bit troublesome. It's even possible that it won't happen at all. Why wouldn't they meet at APEC? Instead, is it possible that after APEC ends, they'll arrange some other meeting? It's really hard to say. But I believe that as long as the Chinese side wants to meet with Trump, Trump will definitely clear his schedule to meet with, to meet with Xi Jinping. Unless it's at a really difficult time to coordinate, otherwise, they should be able to make it work. So, we'll keep an eye on it when the time comes. Trump and Xi might have a discussion. They might talk about trade, rare earths, fentanyl, soybeans, and also the Taiwan issue. This is actually something to watch closely. If the 2 of them meet at the APEC venue, it probably won't be for very long. It's not going to be a separate, special meeting. It really depends on the circumstances. Simply put, it depends on the situation. If it's just a brief meeting, they won't discuss that much. Instead, the topics will likely be trade, rare earths, fentanyl, soybeans, and the Taiwan issue. Among these, trade, rare earths, soybeans, and fentanyl are probably just for show. If Xi Jinping really wants to talk, it might only be about the Taiwan issue. So, that's something to pay attention to. I think they will still talk, but why is that? Because setting this topic is important. What's more important is looking at this report. Regarding tariffs, China's exports to the US are still at $1 billion a day, which is a pretty high amount right now. The US has set tariffs at 55%. That means, with a 55% tariff, for something that costs $10, you end up paying $15.50 for it. That's how it is. The total cost comes to $15.50, right? And yet, every day there's still $1 billion worth of goods being bought from China. That means, basically, the demand is very inelastic. It's not something you can just switch out. It's something you have to buy, no matter what. And if you compare September to August, the month-over-month increase is slight. By the end of the year, August saw a year-on-year decrease of 33%, but the increase is small because in September, the year-on-year decrease was 27%. So, this is something we want to point out to everyone. This really is quite a troublesome and annoying issue. When it comes to tariff quotas, you still have to buy, right? That means even when the tariff quota is at 100 or 200, you might still have to grit your teeth and buy it. There's just no way around it. Otherwise, if you don't get the intended effect, it might be better not to buy at all. So some products do grow well by the end of the year. For example, some things from China, like electronics. And then there's another thing, rare earths. This is really the key issue. I think if there are real problems with the supply of rare earths, the auto industry will be up in arms, the defense industry will be up in arms, and the chip sector will be up in arms too. These are all areas under a lot of pressure. I think in the end, Trump will have to address this. Meet with China, but China will definitely come to the table with a menu of its own. Basically, you have to agree to buy everything on this menu before you can come talk to me. I think this menu definitely won't be easy for Trump to swallow, so he's still hesitating here, hasn't fully agreed yet. And if he hasn't fully agreed, China just ignores him. So we'll have to keep watching how this plays out. And then, moving on. We also see another figure here. This is the export data for this year up to September. Let's look at the blue part first, which is up to September, and then the gray part represents the statistics for the remaining time in the fourth quarter. Of course, since this year is only up to September, there isn't any gray or dark gray section yet. But if we look at the blue section we just mentioned, actually, if you look all the way to the right, that's the number for 2025. Looking to the left, well, it's really troublesome. Besides the daily import volume of $1 billion, there's an even bigger issue. Under this 55% tariff, you can see that the tariff itself, it's only lower than 5 other years. Let's count which 5 years those are. The first is 2018, which was the year before the first round of tariffs started. Basically, the investigation began at the end of that year, and then the tariffs kicked in around August. So, there was some early stockpiling that year. Then, the other years are 2021, 2022, 2023, and 2024. 2020 was the year of COVID, and in 2021, everyone started buying like crazy. You can see that after that, all the way to 2024, with Trump coming back, if you look at exports, China's exports to the US, the demand has actually remained really strong. To be honest, it's just something you can't quit. Even now, in this situation, there are so many things you just can't give up, so that's the case here. This wall, for Trump, this wall with China, it's really a love-hate thing. He's both fond of it and frustrated by it. Now, the second wall, that's really just a headache for him. He finds it very, very annoying, honestly. On Tuesday, Trump said again that he doesn't want to have a meaningless meeting with Putin, but then he also said he wasn't canceling it. So you see, he's actually wavering again. Why is he saying this? Well, of course, it's because they can't agree on the terms. But here, I want to mention that the second wall, which I haven't written about, is it's not just about Russia, but the Russia-Ukraine war. Why does this involve America's traditional allies, meaning Europe and NATO? Well, one thing about the NATO countries in Europe is that there are a lot of them, both big and small. The bigger countries, in terms of NATO, are the UK, Germany, and France. If we're talking about the EU, then it's mainly Germany and France. And then, besides those, and then there are these smaller countries, and their attitudes differ between the North and the South. For example, the 3 Baltic states and the countries in the so-called Three Seas Initiative are extremely nervous, always feeling like Russia is about to come for them. But the southern European countries, like Spain, Italy, and Greece, they feel like, well, this. Russia is far away, I'm enjoying the sunshine every day, feeling great, so don't come here making a fuss. That's one of the issues. There are many different attitudes and voices in Europe. Yesterday, I saw something new and interesting. In Europe, this was brought up by the UK, by the British Prime Minister Starmer. He said that Europe has put forward a 12-point peace plan aimed at ending the Russia-Ukraine war. This is because Trump just recently brokered something in the Middle East, including the ceasefire. It's a 12-point peace plan, a 20-point peace plan, and then Europe over here got really clever and said, hey, let's not make it so complicated, we'll just do 12 points. And why was the Gaza peace talk successful? The main reason is that the US played a role as a guarantor, so everyone believed that. Alright, even if I don't trust you, even if I think Israel will still act badly and go back to its old ways, at least the US has made a promise, so I'll trust you one more time. But, Europe over here is also pretending to be something it's not, trying to act tough, saying they want to do the same thing, that they also want the US to come in as a guarantor. But the problem is, if the US comes in as a guarantor, then it becomes a US-Soviet standoff, or rather, a US-Russia standoff. How could Russia possibly agree to that? So, on the surface, this seems very clever, but it's just not doable. I simply can't do it. It's that kind of situation. So when you think about it, sometimes you really can't tell if these Europeans are naive, or if there's something else going on, or if they're just being devious. Anyway, let's look at some of the details here. The peace plan includes Russia returning Ukrainian children, exchanging prisoners of war, and providing security guarantees for Ukraine. In other words, NATO or the US would have to get involved. But the real issue is the main point here. Then there's the idea of setting up a war reconstruction fund. Do you really expect Russia to compensate you, to pay for your rebuilding? Ukraine is asking for way too much. And then, they want to secure a fast-track path to join the EU. This is because, well, Ukraine's side is also pretty good at wishful thinking. These ideas are really naive and dreamy. And then, Russia's housing sanctions will be gradually lifted. As for the $300 billion in Russian central bank reserves, well, those will only be unfrozen after reconstruction. And if Russia starts another war, the sanctions will be reinstated and everything will go back to how it was. But here's the main point. What you can't get on the battlefield, you also won't get at the negotiating table. This is something people have said over and over again. Now, the second thing is, the current situation on the battlefield, well, sorry to say, it's not looking good. So let's take a closer look. We'll use the deep state map live. Another one I often check myself is. Previously, I used to look at the Ukraine world map, which is also live, ua.map, I think that's the one. Anyway, for Ukraine, it's basically these two. Both of these maps are actually set up by people from the so-called pro-Ukrainian government side. But now, we have one. So, if you look at the screen, and if you can see it enlarged, take a closer look, you'll notice that a lot of the arrows are pointing forward, indicating directions. Most of these arrows are mainly in the eastern part of Ukraine, focused on the Donetsk area and the direction of Krasnohorivka. As for Krasnohorivka, I also I've marked it here for everyone to see. What I want to say is that the Russian army is still slowly advancing on the eastern Ukrainian front. Maybe the pace isn't fast, but they really are gradually nibbling away at Ukraine. And then, in addition, this Red Army city is now almost surrounded on three sides. And actually, with a lack of medicine and supplies, this is already very close to being a textbook example of a siege. If there aren't peace talks soon, I think Red Army City will probably fall before the end of the year. So everyone should pay attention to this. I think this situation is actually very unfavorable for Ukraine. Morale is really low because there's been no rotation. Weapons and other supplies are scarce, so this is not good for Ukraine. About the Tomahawk missiles, they want to give them, but Trump is clear-headed about this. They can't just give them away. Tomahawk missiles can carry nuclear warheads. When you launch one, while it's still in the air, you don't know if it's carrying a nuclear warhead. So let me ask, will Russia accept that? Would they accept it? Your conventional weapons might not seem as good as NATO's, but what about nuclear weapons? That's a huge issue. You're basically pushing things straight toward nuclear war, and even Trump, no matter how extreme, probably wouldn't go that far. So here, all we can say is that this is a really tough situation. The Russia-Ukraine war is a really troublesome issue, because Ukraine has its own position, and every European country has its own stance as well. Cooperation isn't guaranteed, and it's also not just pure competition. Basically, everyone has their own hidden agendas and different dreams while sharing the same bed, so it's all very complicated. Alright, so finally let's look at Trump's third wall, which is domestic politics. Originally, I thought I'd only talk about this topic today, but I didn't expect the other two issues to pop up and cause trouble again, all the way up to yesterday. The US government has been shut down for 21 days now. Today marks the 22nd day, and Trump is demanding that Republican senators he wants them to stay firm, not to compromise, and to tell the Democrats that if they refuse to vote to approve the funding, they'll have to bear the political consequences. But you know, sometimes the situation is actually the opposite, because this time the Democrats are only insisting on one thing, which is to extend the Obamacare healthcare reform subsidies. Of course, the Republicans just absolutely refuse to budge on this point, so they're stuck here. That's why, in this part, I actually think, based on past experience with US government shutdowns, no matter who's in power, when a shutdown happens, the longer it drags on, the more pressure falls on the party in power. If the Republicans are in power, the pressure is on them. If the Democrats are in power, then it's on them. So right now, Trump is the one in office, so of course, in the end, the pressure will still fall on Trump. He'll still be under pressure to find a solution, and then actually, the Senate Democrats have shown some goodwill, because Schumer and, I think Jeffrey also mentioned wanting to work something out this week, before Trump leaves the US to come to Asia, to see if they can reach some kind of agreement. They're looking for, a solution, right? They have indeed reached out, but I think the Democrats will probably hold a pretty firm stance at this point. If Trump still refuses to negotiate, then we move on to the next part. This is about, some numbers from a few betting sites, gambling websites. They, usually everyone talks about Polymarket, right? Now, we're looking at another site called Kelsey. This one's pretty interesting. If you look on the right, I've highlighted it here. The probability of it taking more than 25 days is 90%, and for more than 30 days, it's 85%. Okay, more than 35 days is 72%, and more than 40 days is, let's see, 53%. So, it looks like if we use 70 or 80% as a benchmark, the most likely outcome is between 34 and 35 days, which means it'll probably go past October 1st, so a resolution will likely come in October. Now, in addition to that, the Polymarket survey, coincidentally, shows something similar. It says that the proportion betting on more than 30 days is 83%, while those betting on 10 to 29 days is 19%. So, looking at these numbers, you can pretty much get a sense of the situation. Most Americans expect that it might get delayed again, really. But honestly, I have to tell everyone, because the backlog numbers and some of the government's efficiency issues, the backlog just keeps piling up more and more. So if you really go over the limit, after a month, I think the pressure will be very high, especially, the mood among American soybean farmers is really bad because they can't sell their soybeans. The grain silos are full and the fields have had a bumper harvest. After harvest, they don't know where to put them, but if they don't harvest, the soybeans will just rot in the fields. So this is a real headache. And now, if you say you want to give subsidies, sorry, but the government officials, whether it's the Department of Agriculture or the Treasury, they just can't get the money out. If you don't solve this problem, the farmers are going to be really upset. Especially now, you know, this. Trump went and gave aid to Argentina. Now, for soybean farmers, Argentina is their second biggest competitor after Brazil. So basically, it's like you're helping their enemy, and they just can't wrap their heads around it. No matter what kind of international politics explanation you give them, they just won't accept it, because if they could accept it, they wouldn't be so single-minded. That's why they end up becoming diehard Trump supporters. And then there's another thing. Trump recently said, since beef prices in the US are really high, and Trump, being such a genius, he said they should import beef. Argentinian beef, you know. Sigh, the American cattle ranchers would probably flip out, right? Like, what are you doing, importing what they see as second-rate Argentinian beef to compete with us? That would really make them mad. So I think lately, in these traditional red states, Trump's base is starting to make some noise. If he really keeps pushing this, it's actually not a good thing for him. Alright, let's quickly take a look at the news and move on to the second topic. So, Trump, yesterday, it's been a while since he criticized Powell, but for some reason yesterday, he suddenly thought of Powell and started bashing him again. Also, there's another piece of news. On the 18th, a bit later on November 18th, he'll be receiving the Saudi royal family. Salman, so this might be about reaching an agreement from back in May, when he visited Saudi Arabia. There might even be a signing ceremony, which would be related to security and legal matters. Also, the US government has said they want to replenish the Strategic Petroleum Reserve. I think the timing for refilling the oil reserves is way better than what Biden did. Alright. We still have to give Trump some credit here. After all, he does have a pretty good understanding of these things, certain industries, at least, he knows them well. Also, the Trump administration is planning to talk to China about Kazakhstan's tungsten mines. Actually, Trump has been working really hard lately, searching for mines all over the world. So, let's hope he succeeds. Next, let's take a look at the financial reports. As for yesterday, it was pretty strange with the defense stocks. The companies that reported good earnings ended up dropping by the end, leaving an upper shadow on the candlestick chart, while those that didn't report well actually left a lower shadow. The earliest to announce was Northrop Grumman, we'll just call it Northrop for short. Northrop's revenue guidance was revised downward, they lowered it. The reason they gave was that their aerospace systems contracts are nearing completion, so revenue is expected to drop. But here's the weird part, their adjusted EPS, or earnings per share, was actually revised upward. That's pretty odd, but if you think about it, it makes sense. They're anticipating that some contracts in certain divisions are ending, so revenue will start to decline. But overall, their profits are going up. Why is that? Actually, as I was just explaining, the reason their profits are rising is because they're working on the Sentinel Intercontinental Ballistic Missile Program, which is set to replace the old Minuteman III ICBMs. When you're producing something new like this, your gross margin and profitability are generally better than just manufacturing the old models. So this is likely what's boosting their profits, and that makes sense. But if you look at it, on Tuesday the stock actually dropped, but you can see it left a really long lower wick, so I actually think that's not bad at all. In a moment, we'll discuss a common issue among defense stocks. Now, as for Lockheed Martin, their strong demand comes from their missile and space business divisions. Also, Lockheed Martin has narrowed its revenue guidance range. They narrowed their earnings range, but actually, this is good news. Why? Because previously, their forecast for annual revenue last quarter was between $73,751 million and $74,475 million. Now, they're saying it will be between $74,250 million and $74,750 million. So basically, they just raised the lower end of the range, which means this isn't actually a particularly bad situation. Also, their earnings per share forecast was revised upward, so it looks like things are going pretty well for them. Alright, the main point is, they also mentioned strong demand from the defense sector, so, they raised the lower end of their forecast, but because. After the announcement, the market noticed that their free cash flow had been reduced, so the stock price dropped. If you look, there was a really long lower shadow on the candlestick, which means that at first, when the price was going up, everyone thought it looked pretty good, but then it got sold off. So, to talk about why demand is so strong here, it's actually related to the F-22 and especially the F-35. Europe has placed a bunch of F-35 orders, and there are also missile orders, so that's a factor as well. And the outlook is pretty good. Also, Raytheon was really strong yesterday. The main reason is that in the third quarter, they secured a new contract worth $37 billion. This contract isn't something that will be completed in just one quarter. It's going to be part of their so-called cumulative contracts. If you look at it, $37 billion compared to their single quarter revenue, that's actually a pretty hefty contract. So, what did they do with their revenue range? They raised it to between $86.51 and $87 billion. So, what's the main reason for that? The Patriot missile defense system. Well, just like the Sentinel, the Patriot Advanced Capability 3, or PAC-3, is still in high demand in Europe because the need for missile defense remains very strong there. So, that's the reason. Orders are extremely strong. Also, the demand for Pratt & Whitney aircraft engines is very robust, so that's why things are trending upward. So, the revenue and earnings range has also been raised accordingly. Actually, as you can see, missiles and ammunition, as well as Pratt & Whitney aircraft engines, have really driven things up. You can see a sharp jump. And although there's still a fuse left, I think, Raytheon is a bit different from other companies. Raytheon's business model is similar to Boeing's. Raytheon is very civilian-oriented. About half its business is civilian, about half is military. Military accounts for a bit more, while civilian is just under 50%, and military is a bit over 50%. Another company that's somewhat similar is Boeing. For Boeing, orders from the US government make up only about 30% of their business. It's around 30 to 40%, so the majority is still commercial aircraft. But let's say, for example, when they encounter a government shutdown, if the commercial aircraft division can still take orders, that's actually a kind of support. So you can see that this time it played a role again, which is why their stock jumped. And I think right now, it looks like there's a good chance for them to keep performing well. Now, speaking of this, there's a big issue with defense stocks. Of course, on the 24th, I remember it was General Dynamics, and then on the 30th, it should be HIL, which is part of the Aerospace and Defense Group. By then, the earnings reports for the 5 major US defense companies will have all been released. Alright, so far, the government shutdown hasn't had any noticeable impact on the profits of defense contractors, at least not up to now. So the question is, why is that? What's the reason? Right now, the contracts are what we call backlogs. These backlogged orders are still quite a lot, so you can extend the shutdown for a month or more. Actually, everyone is still okay with it. As long as it doesn't go over 2 months, I think everyone can tolerate it. After all, there are still plenty of previous orders that haven't been completed, so you can just take your time. It's fine, we'll just wait. That's the situation for every company. But the problem comes from something mentioned in the nickname section. Northrop, this KC Wooden, even the CEO, said that when making the full year forecast, he had already taken this into account. The Pentagon, which is the US Department of Defense, has had some delays in these contracts, and the shutdown period shouldn't last until December, they already feel like they can handle it. I believe that if Northrop is doing this, then actually Lockheed Martin, Raytheon, and other defense companies probably have a good idea about it too. Why is that? Because the ones who understand these government shutdowns the best might actually be these arms manufacturers. And here's something interesting. Let's assume the shutdown only lasts a few weeks, say until mid-November or after mid-October. If we do the math, if you look at what we just mentioned, as for the length of the shutdown, right, whether it's 35 days, 30 days, 35 days, or 40 days, if you do the math, they say it will last until mid-November at most. So it's possible that after Trump returns from Asia, they'll be getting ready to reopen. Also, there are some tricks being played in the military, just to let everyone know. So, the government shutdown probably won't have any immediate impact. Another issue is military use, military industry, military use rare earths. This is also something Trump is going to discuss with Xi Jinping about how to negotiate or exchange for them, which could be quite complicated. I think this part is too tangled, so instead of speculating too much, let's wait until after their talks to discuss it. As for the defense industry, fifth, they have stockpiles, so they can probably wait for about, I think at most another quarter. Basically, the military-use rare earths can last them for another quarter. But if it drags on any longer, everyone will turn hostile. So that's basically the situation. As for the military industry part, things aren't looking too good for Texas Instruments. First, if you look at their expected revenue versus actual revenue, the actual revenue is better than expected, but it's still not great. However, their actual earnings did not surpass the expected earnings, and then their revenue range is actually from $4.22 billion to $4.58 billion. If you take the midpoint, it's lower than the market's expected $4.5 billion. And then the expected earnings per share is 1.29, which is also lower than the market's expectation of 1.39. There's another thing. They actually mentioned on the earnings call that there have been some delays in placing investment orders, mainly due to some noise in the market. The main reasons are tariffs and also some of the semiconductor investigations happening in China. So with this kind of result falling short of expectations, people are starting to worry about the recovery of the semiconductor industry. But actually, we need to clarify that this is what's called an analog IC, which refers to the more traditional, mature chips used in automotive or industrial applications. So this is different from TSMC's kind of advanced ICs. It's not in the same category. That's why it's being discussed here. You mentioned that customers are slowing down their order placements, so the stock price dropped as much as 8.5% after hours. However, it did recover to flat by the end. But I want to point out to everyone, this 8.5%. If you look into it, I remember its pre-market performance wasn't good either. This is actually a rather negative piece of news. Why? Because TI is the leader in analog ICs. If it's not doing well, then ON Semiconductor isn't doing well either, and the same goes for Tower Jazz. So this will drag down several stocks in the analog IC sector. So this is relatively. That's a pretty big problem. Nexperia is actually quite similar to them, and there might be some overlap in their products. This effect might not be immediate though, because TI has its own strengths. So in this case, we'll have to keep an eye on it. The ones that will be directly affected are ON Semiconductor and Tower Jazz. And also its analog IC segment, so let's take a look. The outlook for the industry is still very important. Another thing, yesterday there was a really impressive result from 3MCM's revenue. We saw that the actual revenue was $9.318 billion, which was higher than expected. However, the actual EPS looked a bit low, but after adjustments, it was actually about the same. And then, this. Also, the main thing is that they casually raised the full year 2025 EPS guidance range from $7.75 to $8.05 up to $7.95 to $8.05. In other words, the lower end of their projected earnings has been revised upward, which the market is pretty excited about and generally agrees with. As for their CEO, he mentioned that it's all about innovation. Right, because people are paying attention to the curve of new products. We especially need to point out that actually, their products aren't just post-it notes. They actually make a lot of other things too. They have some materials for industrial use, or for hospitals and pharmaceuticals, and even for environmental protection. For example, those wind turbine blades, yes, the ones used for wind power generation, they even supply some of those materials. So here, when they talk about innovation, that's what they mean. So let's take a look at this. Their situation is relatively good, so the increase in this K-line, the rate of increase is only 7.66, which doesn't feel that strong, but the problem is that the K-bar itself is very strong. The signal is very strong. If we look at it, in principle, there should be a chance for it to perform well in the near future. And in addition, we'll still do a review later, since there were a lot of announcements yesterday. There are both good and bad points. Let me explain to everyone. As for the rest, the aviation sector is relatively good because GE split into 3 companies. It split into GE Vernova, which is related to electricity, and then GE Healthcare. These have already been spun off. The aviation sector is the original department related to aircraft and those things, which remains here. This part is still somewhat similar to Raytheon, and they have raised their full-year outlook, so that's relatively good, which is why the stock went up. Now, General Motors surged 14.86% after hours following their announcement. But why do we need to highlight this? Because I feel that General Motors isn't really delivering. Why? First, their revenue is indeed very good, that's true, but their earnings actually aren't that great, and then, so why is their revenue so good? Because the average car price in the US has already exceeded $50,000. Of course, that means their top line, their revenue, looks good. But the problem is, their earnings are below expectations. What does that mean? It means tariff costs are still eating into their profits. So I don't think this is very good. They also mentioned cutting back on electric vehicle production, which in the short term seems to help profitability. But the problem is, everyone knows that the focus 10 or 20 years from now will be on this. At least in the US, the future focus is still on electric vehicles, so cutting back in this area is obviously not great. Now, aside from GM, if you look at Ford, let's take a look at Ford's financial report. I remember it's supposed to be released either tonight or tomorrow night. Bam. Then, once it's released, we'll see if Ford has a similar situation and whether Ford will also cut back on electric vehicles. Ford's CEO is someone who tends to be more focused on R&D, so I think he'll still maintain investment in electric vehicles. So it could end up that, in the end, for pure electric vehicles in the US, of course, Tesla, which isn't a traditional automaker, if they hold their ground, they might be the next one. Also, Chrysler has already been taken over by that Italian company. They've been acquired, so I don't really want to talk about that, since their financial reports are in Italy anyway, and Chrysler's cars weren't that great to begin with. Okay, moving on, Philip Morris, the tobacco company. As for their financial report, there isn't one, but because their financials are considered to be of poor quality, their stock dropped. Now, another interesting one, let me mention this from yesterday, Halliburton. This is a company that provides oil extraction services. Its revenue was better than expected, though its earnings weren't great, but the stock still jumped by 11.58%. It's kind of like Caterpillar. Caterpillar said that because of the huge demand for electricity from AI, they're involved in infrastructure and building power plants, so Caterpillar's heavy machinery is needed for that. That's why it's now considered an AI concept stock. Now, as for Potter, or actually, Bolton, he also said that they're going to get into the power development for AI data centers. And it's because of this plan that their stock also jumped by 11.58%. That's pretty impressive. And then, in addition, Steel Dynamics revenue and earnings were better than expected, so their stock went up. Now, after hours, there were some important announcements to pay attention to. There are two good ones and two not so good ones. The first good one is super important. Yesterday we talked about the Da Vinci surgical system, and the company behind it is Intuitive Surgical. Not only were their revenue and earnings much better than expected, but their outlook going forward is even better. The Da Vinci surgical system is basically a kind of microsurgery, so the incisions are small, and, well, it's just a very effective procedure. I've heard from older folks that the Da Vinci surgery gets really good reviews, and of course, the cost is higher, but the thing is, it's a quality product. So, you can see their stock went up 16% after hours. If you look at the closing price, it was also really strong. There's just no way around it. When a company puts in the effort and invests heavily in R&D, and the result is a great product, then it deserves to go up. That's just how it is. Now, moving on to another one. As for Netflix, they mentioned that there was a tax dispute in Brazil, so they had to set aside a deposit and record a tax expense. That's why, if you look at their financials, their profits came in below expectations. But their revenue was also affected to some extent. Still, even though the stock did drop after hours, I actually see this more as a one-time negative event. I think once the market digests this, there's still reason to be optimistic. And then, Capital One, right, they acquired Discover Credit Card. So after the acquisition, their revenue and earnings shot up, and the stock rose 4.85% after hours. Capital One is actually very dynamic, especially in the US credit card market. Their marketing is especially strong, so yeah. Personally, I quite like them, so I think this should be pretty good. Then there's also Mattel, which is the parent company of Barbie dolls. But they have a problem. It's a more traditional product, just dolls and toys, so they're more heavily impacted by tariffs. They also mentioned that because of tariff uncertainties, retailers have delayed or postponed their orders with them. So, their third quarter financial report didn't meet expectations. Why is the third quarter so important? Because the September financial report, if you get orders coming in around this time, it's basically to prepare for Christmas. If the orders don't come in at this time, then basically this year is a bust, and the US toy business will have to wait until next year. That's why their stock dropped quite a bit after hours. So, yesterday's after hours data, we've pretty much finished reviewing it. Now, today, the main focus is still on Lam Research, IBM, Alcoa, and most importantly, Tesla. That's the most important one. And then, as for tomorrow, let me quickly repeat for tomorrow: Humana Health Insurance, and then Dow Chemical, though it's not highlighted, that's okay. Of course, you can still keep an eye on it. Honeywell is another one. This is a benchmark company in US automation stocks, a pretty important one. Hasbro as well. As for consumer goods, there's American Airlines, then Southwest Airlines, and O'Reilly, the auto parts company. It's worth watching because someone in the industry recently went under, so we should see how it performs. But I think that's probably, the first brand had its own issues, but O'Reilly itself shouldn't have any problems. Then there's Intel. This one is very important. Next is Ford, and then usually there are a bit more earnings reports on Thursday. Newmont is set to release its earnings. Newmont's earnings today were not good. As for Friday, there are fewer reports. P&G, General Dynamics, Baker Hughes, HCA Healthcare, and Alaska Airlines, those are the ones. Next, let's look at some US stock news. There are two pieces of news about OpenAI. The first is that OpenAI is training AI models to take over the tedious tasks of junior bankers, like opening accounts. You know, things like data entry and such. I think this is something that will be developed gradually. This is basically agent AI, meaning AI agents. It should be able to take over some tasks, but some things will still involve regulations, so we'll have to keep watching. Also, another piece of OpenAI news from yesterday was pretty big and had an impact on this. So, Google's stock price, well, they recently introduced something called Atlas, break time equals 0.5s/, which is, in essence, a web browser. So this caused Google's stock price to drop, but later on, after hours trading showed a recovery, Google's stock price did bounce back. Now, Warner Bros. Discovery, which is the parent company of the Discovery Channel that we watch in Taiwan. Now, there are companies considering a merger or acquisition with them. Previously, Paramount and Skydance had shown interest, but Warner Bros. Discovery rejected their offer. Now, it looks like Netflix and Comcast are considering it. Comcast is a cable TV company, and Netflix, as I just mentioned, is that streaming platform. They're both considering an acquisition. In terms of style, I think Warner Bros. Is more aligned with. Discovery would probably lean more toward these two companies. It was a bit surprising when Paramount was acquired by Skydance. But after Skydance took over, they've been very active, so shareholders are probably quite happy about that. According to insiders, Anthropic is in talks with Google, and they might be helping by providing some extra computing power. This is just for reference. This is Claude's, model. I'm not really sure how to pronounce it. It's a tough one. Basically, it's about collaborating with Google. Next, regarding the US dollar index, it rebounded yesterday. The main reason? Well, Fumio Kishida was confirmed as Japan's prime minister, and he's going to follow Abe's policies, implementing the 3 arrows and all that easing. So, the market is full of speculation, which made the yen weaker and pushed the dollar up. But let me talk about it again, since someone asked yesterday. I'll just say it straight. Why am I not optimistic about Kishida? I'm not optimistic about him either. Honestly, his energy and capability just don't compare to Abe's. Abe had his own faction and was an old school figure. Secondly, after he switched to the Japan Innovation Party, he formed a political alliance, but it's not as stable as the coalition between the Liberal Democratic Party and Komeito, which together can secure a majority. So, how many good policies he can actually implement, or how many he can even propose, is still uncertain. That's the third point. All the most important policy measures have already been proposed. Sometimes they do have an effect, but the problem is that the side effects can be significant too. So, honestly, how many of these policies can actually be implemented, and what their real impact will be, is still unknown. I think the effectiveness will probably be discounted. That's why we've seen some recent fluctuations in the Japanese stock market and the yen. If it's beneficial for everyone, then congratulations to all, but honestly, I'm just telling it like it is. Japanese stocks might still have some appeal. So it's worth watching how the stock market develops. But purely in terms of the Japanese economy, I don't think Sanai Takaichi will make any particularly significant contributions. As for US Treasury bonds, there was only a slight movement yesterday, and today it's still just a small change. Without any data to guide the market, I think that's a bit troublesome. We'll probably have to wait for the CPI data to be released on Friday before we see any significant movement in government bonds. On another note, oil prices had a small rebound yesterday, but today there's been a big rebound. Let's talk about that now. Look at the candlestick on the far right today. It gapped up. This is today's red candlestick, not yesterday's. And it's actually very strong right after the European session. Why? Because rumors are circulating that the US and India may be reaching a trade agreement, and India's tariffs will be reduced to 15 or 16%, or even jump back to the 100% mark. This is actually a prelude to US-China trade negotiations. The US wants to negotiate tariffs with China, and specifically picked one of China's competitors to lower tariffs. But I think if you're trying to influence China this way, it probably won't have much effect. However, the most direct impact here might be on the oil market, because India will probably agree to buy a somewhat smaller amount of Russian crude oil than before, and will also likely reduce its exports of slightly refined oil products to other countries. Everyone involved in these activities will probably pause or temporarily suspend these operations for a while, so with the supply decreasing, that's why oil prices have surged today. But I think, as I mentioned to you, actually after doing this, the negotiations between Russia and Ukraine will probably become even more difficult. And then, the more trouble you cause, the more it seems like Russia will get even closer to China. So, this might not actually be all that great for the US either. Also, the Indian market looks huge, but it's not an easy one to crack. So, was everyone talking about silver yesterday? Well, after hitting a new high yesterday, it triggered some profit taking, with buying and selling pressure. Actually, not yesterday, but the day before, there was a red and black candlestick. After reaching a new high, it dropped sharply. Let me just mention again, what we're looking at now is the spot price for silver and gold, and actually, silver tends to move together with gold. So, first of all, when silver starts to move, you need to be a bit more cautious. In the past, I don't know, over the past few decades, I went and looked into it, based on what I was taught, what my seniors taught me. They always said that when silver is going up, you have to be careful. Why? Because it could mean something. It's a case of lagging and catching up. Once it peaks, whoa, that's pretty much the end. But the problem is, this might not be the end of a cycle. It might not be the end of a long-term trend, but for the short-term trend, you need to consider this. Now, the second point. What we're showing here is spot gold. But you have to understand that the essence of gold is that futures traders are the ones who really drive the price. And with futures, there are both long and short positions. So actually, everyone should understand what I mean. There are long and short positions. No matter how good your spot pool is, you must consider that futures have both. That's important to note. Third, even though it dropped sharply yesterday, it only returned to the 20-day moving average and hasn't really broken below it. So, what am I saying? You should generally understand correcting the deviation from the moving average. You should more or less know what to do now, so don't find this too strange. Let me say it again, if gold is above 4,000, then it's basically a trading buy. If you get it, you get it. That's about as much as I can say. Also, Bitcoin is really important here. It surged a lot yesterday. After that big surge, it actually closed with a small drop. If you look at its candlestick, the upper and lower wicks are really long. Today, it's turning down again and is about to test the 200-day moving average. If it breaks below the 200-day moving average today, you need to be careful. It's a key support level. For Americans, no matter what, the 200-day moving average is a very important line. So, for Bitcoin, after the previous peak and sharp drop, gold also played the same game, so be careful. Basically, all kinds of assets face the risk of taking turns correcting. And especially when we look at Bitcoin and then at gold, we should still focus mainly on the stock market. So we still need to pay attention. It looks like the stock market is moving up, and just to add a quick note to what I just said, I showed everyone some numbers from yesterday's corporate earnings reports. To be honest, if you look at the ratio of good to bad results, the good ones really do outnumber the bad ones by quite a lot. So, objectively speaking, American companies are doing well in terms of profits. In theory, the stock market should keep going up, but we still want to remind everyone that when the market is high, you'll see corrections happening in different sectors one after another, so be careful about this risk. After all, we're investing real money here. So everyone should pay attention to this part. Now, let's quickly take a look. Yesterday, for example, even though Coca-Cola's performance was pretty good, oh, I might have forgotten something about Coca-Cola yesterday. Let me add a bit more about Coca-Cola. There's this thing where they're using regular sugar to replace artificial sweeteners, which has boosted their sales. Also, the airline and aerospace sectors did pretty well. These are all considered more traditional industry stocks, so yesterday, traditional industries performed better than tech. So, on Tuesday, the Dow Jones was up 0.47%. If we look at it, its performance was actually better than the S&P. S&P tech stocks were under pressure, and yesterday the S&P basically just broke even. Also, the volatility index actually went down, so in that regard, it's true that the S&P was flat yesterday, but if the volatility index continues to trend downward and gradually narrows, then the S&P should have a chance to slowly move up in the future. Okay, now let's talk about equal weight. The equal weight index is at 0.48, and it's the same situation. After removing or diluting the weight of tech stocks, you can see that the traditional sectors also performed yesterday. In fact, they did better than the overall weighted S&P. As for the Nasdaq, that's why it's relatively suppressed, dropping by 0.16. But honestly, that's not a big drop. It's more like individual stocks fluctuating against each other. The Philly Semiconductor Index fell by 0.66 yesterday, which is a bit more noticeable. You can refer to the leading gainers and losers here. So, that's the situation for now. This still isn't strong enough. You still need a solid green candle pushing upward to really continue and pull out that upward trend. Okay, as for the Magnificent Seven, they also dropped yesterday, which is a bit weaker. So today, we might still want to take a look at the individual stocks within the Magnificent Seven. Amazon had a big jump, but the issue is that it experienced a major outage yesterday, yet it actually didn't have any negative impact. The stock price overseas still went up. But pay attention here, it climbed back above the 20-day moving average yesterday. However, the thing is, at most, this is just a high-level sideways consolidation. In fact, it hasn't even fully reclaimed that level. Before the 50-day moving average, there was still quite a bit of resistance. On the other hand, Apple is still being driven by the benefits of its new devices, so Apple continues to rise. There are also reports from Hong Kong media about the iPad. The iPhone Air will be reduced, and there will be additional orders for other iPhone 17 models. I also saw some of our younger colleagues at the company buying the iPhone 17, which just goes to show one thing. The new iPhone models are still attractive to young people. As for Facebook, they are collaborating with Blue All to launch a data center project for AI investment. Blue is a financial investment company, I think. It's probably a fund. From what I remember, it should be a fund. But if we look back at this, it's similar to what we saw before with Amazon's performance. It did break above the 20-day moving average, that's true, but the 50-day moving average is still pressing down from above. Since it hasn't broken back above that, at most you can expect it to move sideways and fluctuate. The same goes for Microsoft. A slight increase. The CEO of AI got a good compensation package, so hopefully he can deliver better results. The earnings report will be released after the market closes on the 32nd, so everyone, well, on the 32nd, actually, the earnings will be released after the market closes on the 29th, which is early morning on the 30th. So, looking at this, everyone still needs to pay attention. The most important thing is whether this earnings report can drive the price up. Also, Nvidia dropped yesterday, and there were rumors that Nvidia and BlackRock are working together in the US on that. They're working with TSMC to manufacture Blackwell chips in the US, but after production, the packaging is brought back to Taiwan. If you want to move this process, it's not going to happen that quickly, and it's actually very difficult. As for Tesla, its stock dropped. Yesterday, there was news that they would be recalling some vehicles due to safety concerns with the battery packs. But in my opinion, this is just high-level volatility. If today's earnings report is good, there could actually be an opportunity. This could help drive the stock price up. Now, as for Google, its stock dropped quite a bit yesterday, mainly because OpenAI released its AI browser, ChatGPT, which is set to compete with Google's AI. But the thing is, even though it fell 1.37%, it actually rebounded 1.57% after hours. I think this threat might not be as big as it seems. Why? Because, after all, each has its own strengths. Well, it's just competition. I don't think competition is necessarily a bad thing, and it doesn't mean the stock price will get crushed. On the contrary, with competition, both companies might actually survive. Now, as for Oracle, it's still relatively weak. Anyway, the market still has doubts about it. Yesterday, its momentum was a bit weaker, and although it touched the 50-day moving average and stopped falling, the problem is that we still haven't seen a rebound. So, we need to keep watching it for a bit. The main issue is that the gap from that jump in price is just too big, so it'll take some time to resolve the pressure from all the skepticism. Now, moving on to Intel. Yesterday, there was a slight uptick here, with some choppy movement at the high levels. The earnings report will be released after the market closes tomorrow, and I think everyone is keeping a close eye on that. As for Broadcom, its performance was relatively better. Well, actually, not so good, as it dropped 1.88%. But it's the same situation, it's just fluctuating at high levels. They did mention that they've added a fourth customer, which is basically for cloud AI. This AI model, it should be their new client. Moving on, lastly, there's Micron. Micron was down yesterday. They did mention that two senior directors, are stepping down from the board. This shouldn't affect operations, though. The main reason for the drop is probably just a correction after a big run-up, because the main thing is, we're still watching memory chip spot prices. If you look at Taiwan's memory stocks, especially DRAM, you will get a good idea. For example, Nanya Technology, recently, people in the Taiwan stock market have been saying Nanya Tech has turned losses into profits, so this should be. I think this sector is still one that we can look forward to in the short term. Next, let's take a look at the performance of the boomer. Today might be a bit brief. We can see that before the market opens, it's still fluctuating, hovering between slight gains and slight losses. I think we'll have to wait until the main market opens to see any real movement. As for looking at individual stocks here, let's see, ISRG, the Da Vinci system, is really impressive. This company, Intuitive Surgical, went up 18.86%. Like I said, it's just a good company. Maybe after years of hard work, it's finally time for their payoff. And then, on Fino, this should be, I'm actually not too familiar with this one. I kind of forgot what they do. And then, this COF, that's Capital One, right? Their earnings report was good too. They're performing well. As for Gene, I remember they announced their earnings today, but it looks like they missed the estimate. Their third quarter earnings were below expectations, but the stock price still went up. People are speculating, not really sure what to say about that. As for WBD, that's Warner Brothers and Discovery. This should be news about their merger. And TMO, that's, that. Stryker, Medtronic, and Boston Scientific, these are all medical device companies. I think one of them had its rating upgraded. Then Hilton, that should be about their earnings report, and Google, well, this part here. And also, this should be a rebound. It seems like it hasn't really been affected by OpenAI's impact, right? Look at Halliburton, it's still going up. Yesterday it rose more than 10%, and it's still climbing, up another 2%, really strong. Alright, let's take a look at this. Up to the 20th spot, Broadcom has rebounded, and even up to the 25th spot, the pre-market gains are still over 1%. So, it's possible that individual stocks here are still performing pretty well. As for Texas Instruments, you can see their earnings report wasn't good, so the stock dropped about 7.65%. Netflix is still having issues, but what I want to say is, after it digests this negative news, there should be an opportunity. It's not that bad. Compared to Texas Instruments, when TI runs into problems, the impact is a bit bigger. And then for when? And then. But, oh, right, there's still some hesitation about the revenue rebound for Macau casinos. Newmont also dropped. As for on semiconductor, it was probably dragged down by Texas Instruments. HPQ is trending downward, and then MMC and HP are doing extremely well. These are in the same category as on semiconductor and Texas Instruments, so they're also hitting down. Paradigm was doing pretty well before, but today it's relatively weak. Then CMV released its earnings report, and ADI, which is also an analog IC company, was dragged down along with Texas Instruments. Also, NXP isn't doing well either, so looking at today, these are the ones that dropped. There are quite a lot of stocks, and even down to the 25th place, there's still a big drop of 0.8. So today the market might really be more volatile, and the performance of individual stocks related to earnings reports will stand out more. This means the index itself might not change much, but the performance of individual stocks will be more concentrated. Now, let's take a look at everyone's new questions. The deleveraging came on strong and fast. Yeah, gold also surged. Right, actually, you really have to pay attention to this. I think I mentioned this last time, maybe when I was talking about, that topic. Buffett's longtime business partner, Charlie Munger, once famously said that there are 3 important things that can make even a very smart man go broke. He was specifically talking about men at the time. The first is liquor, alcohol, then ladies, he used the plural, so women, and the other is leverage. So everyone, make sure to use this wisely. You really have to be careful and cautious when using leverage. And then India taking over the US soybean orders, that's impressive, let me tell you. Indians don't even eat tofu, so if you want to take it, go ahead. Humph. Is Ukraine a victorious country? You can always think of it that way. Trump is afraid that Russia will get out of control, but actually, it won't. Russia won't lose control. At most, Russia will just go looking for this or that, and China is just a good friend to have. There won't be any real opportunities until November. Peter, you're right, actually, the more we look at it, the more optimistic it seems. We'll probably have to wait until Trump returns from Asia before anything happens. The opportunity to open the door, yeah. The soybean stockpile bursting, that's really making people cry. They're cracking down on and suppressing American beef, but the thing is, American beef is produced by America's weaker farmers, right? So that's just how it is. So, next, let's look over here. If there aren't any new questions, then I guess we'll see you tomorrow. Our show ends here for today. Bye-bye.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.